Numbers as we saw them coming through today. Sentula Mining swinging to a full year headline loss per share of 27 cents. The miner's revenue is also falling by 17%. That's to 2 billion rand. Let's now take a look at the company's earnings and delve into them. And we're crossing over to Cape Town, where we've got CEO Robin Berry standing by. Robin, thanks for joining us today. So the company said to take huge impairments on some of its assets. So just run us through the size of the impairments as you report a widening of your loss per share, headline loss per share, to 27 cents today.
Yes, obviously we had to have a look at what's happened initially in the PGM sector in South Africa. That resulted in us having a good look at the drilling rigs that we used in this sector. And of course, from that perspective, we also looked at the technology that was associated with those rigs and took the decision to take an impairment of some 50 million rand on that PPE in our exploration company. At the same time, we looked at the inventory associated with those particular rigs, and specifically because a large portion of that inventory is in drill rods and it's specific to this type of drilling, and we took a further impairment or write-down of inventory associated with that. We then looked at the overall drilling business and took the decision to look at the goodwill that we'd valued in the business when we acquired it in 2006. And the decision was taken that we should impair that at the same time. So from an exploration point of view, certainly in a fairly tough space at this point, and we've had to take some write-downs and impairments in that business. But at the same time, you know, we've looked at over the last year disposing of the remaining assets in our MegaQ business. We had an auction towards the end of March, and we showed a loss on sale in terms of the assets that were sold on that auction. So I think all in all, we've worked to cleaning up the balance sheet of the business, and going forward, certainly feel much more comfortable about what is actually reflected there.
Forward, because if you just had to look at the statement from this time around, you've got operating activities bringing in cash of 90 million rand, and then you invested 94 million rand and invested 90 million rand. So give us an idea of, firstly, where that investment is going and what type of visibility you have around earnings from operating activities into the next period.
Well, I think, you know, if we look at the business, essentially we've taken the decision to dispose of our coal assets and focus on our core business, which is mining services. And of course, there's been some recent announcements in that regard. So if we look at the business going forward, it's in essence in the 5 operating entities, 2 providing bulk earth moving services, and in this particular financial period, we plan to consolidate those 2 businesses into one. That's the business of Benicon and CCT. And you know, in those particular businesses, they're reasonably capital intensive. We have invested over the last period, but of course, you know, what we are looking at to achieve through the consolidation and through a drive of efficiency of the utilization of the equipment that are in those businesses is to squeeze, get the margin out of the bottom line as opposed to growing top line. Mm-hmm. If we look at our overburden drilling and blasting business, Jeff, and our mobile crane business, Richie, good set of earnings in a tough environment, and you know, on the back of that, you know, we see opportunities to grow these businesses and continue to invest in them. And then, of course, the exploration side, which, as I said earlier, is in a reasonably tough space, put it into a sort of a holding pattern, make sure that once exploration spend comes back, that, you know, we're still in the jurisdictions that you know, we can actually then deliver back into the growth that will come back. We've seen it historically, and I'm sure that, you know, with time, we'll see that growth coming back in the exploration spend.
Mm-hmm. It's a tough time as well, of course, to be in the mining space right now, but you know, Sentula specifically has gone through its own issues. If you just look at the share price right now, it's trading at levels we last saw back in 2004. So Robin, how do you kind of put shareholders at ease? I mean, what would be your message to the investment community around the future as it's shaping out for Sentula right now in light of the numbers we saw coming through today?
Well, I think, you know, as I sort of said just now, I think the first part is to say that, you know, we are going to become, post the disposal of our assets or stakes in our coal assets, we are going to become a much more focused company. What that also does is it means that unproductive capital that has been sitting on our balance sheet of just over some 400 million, you know, will be utilized as actually getting cash back into the company. So, that's the first sort of part of the strategy. The second part is to grow those businesses that we believe there is an opportunity to grow, and they are already providing the requisite returns that we believe are necessary in this market. We've got to get on top of the margin squeeze that we're seeing in the bulk earth moving sector, and as far as that's concerned, it's driving the efficiency of the yellow metal that we've got deployed in it. And of course, the whole exploration side of the business, it's about making sure that we restructure it in the very short term from a cost point of view, so that we're there when things pick up. And from that perspective, I believe we've worked hard to get the balance sheet into a reasonable sort of shape, and from that point of view, it's pretty much you now get what you see.